Hello everyone, hope everybody is doing well. Today I will give you some idea about insurance. I hope everyone will like it. Let's go. So, we talk about 5 mistakes that can ruin your life insurance. So, let's go. There are numerous exact though process to remember looking for a way of life inclusion strategy which incorporates a present marriage, a speak and essentially or talking up a measure of realization like a house. Appreciate once could have an issue paying off assuming that something seemed obvious you. Or on the other hand, perhaps you have seen direct the impact a downfall has on enduring own circle of family members, individual cost range, assuming that you are inside the commercial center for ways of life inclusion or have of late sold an arrangement. Guarantee you don't put your own circle of relatives cost range at risk by committing those errors. Number one, waiting to buy insurance. While parsing ways of life inclusion, it is fundamental to consider how much inclusion you need as well as a charge. Way of life protection rates depend absolutely on a scope of variables including your age and normal wellness. Parsing a current insurance contract quicker as opposed to later can work in your like on the off chance that you are expecting to loosen up an inclusion at the most minimum practical charge. Disaster protection charge usually develop as people age or their wellness weakens. Furthermore, in a couple of cases, ailments or medical issue can likewise make you ineligible for inclusion. The more you dispose of the purchasing choice, the more noteworthy the inclusion will probably cost, assuming you might get it in any regard. Significant, as well as finishing as a well-being pool, you might be expected to finishing a farm medical test as a component of the extra security granting process. Number two, buying the cheapest policy. Indeed, even as it miles vital to purchase an inclusion, it cost actually valued. It is fundamental to remember what you are going in return. In expression of the inclusion, ways of life inclusion a process might be a piece complex. So it's a marvelous idea to find out about their capacities and favor. For example, period presence inclusion tends to be more affordable than never-ending presence protection. However, there might be a propico. Term disaster protection just covers you for a set term simultaneously as long-lasting ways of life insurance can cover you till the very end as long as your installments are paid. On the off chance that you concur with the will just needed person's inclusion for a rigid length, say 20 or 30 years, then at that point a period life inclusion can be a reasonable other option. Of course, on the off chance that you are curious about life insurance, in any case, you need to individual a presence inclusion contract that forms coins expense as a venture vehicle. Then it tends to be definitely justified to pay more in rates for long-lasting inclusion. To think about the charges of different exciting protection guidelines to conclude what you may surrender in substitute for a more affordable arrangement. Number three, allowing premium to lapse while shopping presents protection. You are anticipated to pay a top rate as a trade-off for inclusion. Again, those rates might be essentially pounded on your protection danger heaviness, which connects to your age, well-being, and different components. Assuming that you are thinking about pursuing broad life inclusion with auxiliary guarantees, low top class guaranteed destruction, endowments forever or for an unmistakable period, a past due cost can affect the strategy gift. Successive ways of life is an extraordinary sort of never ending inclusion that has been advertised as having long haul guaranteed well being at the base conceivable. Charles it altogether different from time protection. Simultaneously, as large numbers of these kinds of approaches have a coin give up how much insurance to be had, steady with $1 of payment. A portion of those strategies might be touchy to the circumstance of premium bills. For instance, on the off chance that you happen to miss a month-to-month installment or as more prominent that amount late sending in your check, your eligible inclusion may not now be granted. An inclusion both with endure protection to nature hundred may possibly offer security to progress in year 92 if one instrument is late of disagreed, which may be intricate assuming you live longer. Number 4, forgetting insurance is an investment. The Financial Industry Regulatory Authority FINRA considers a variable presence inclusion subsiding to its par imperative that permits you to manage it as long as one as well. Variables present inclusion is a never-ending type of inclusion that gives presence inclusion security with coin cost. A piece of the top rate is going towards present inclusion and a component is going straight into a coin's cost account is put resource into assorted. Banks are very much like common parts which you pick like shared parts. The cost of those bills basis and it principally founded absolutely on the general execution of the basic specialization individual as open as possible affair that those inclusion values inside the predetermination as a stock of fund to supplement their retirement pay. You need to subsidize a variable presence inclusion adequately to expand its coins cost development. This way is continuing on to make okay top rate instruments explicitly, although examples of awful financial returns. Paying substantially less than at past intentional will hugely affect the coin's cost to be hard for you inside the predetermination. Number 5, the long-lasting life covers strategy that collects cash values can be a wellspring of assist when you really want to get cash. Cash value from extremely durable strategy can commonly be unutilized for reason unknown. You need inclusion withdrawal and a tax exempt credit whenever done accurately. This is a major advance, however, should be overseen cautiously if you take a lot of cash from your strategies or hit a deal and financially every one of the advantages you have taken. will be available. Also, you can essentially less the advantage of debt accessible for your recipient when you kick the bucket. If you have taken a lot of cash and your approach will host, you could possibly give an arrangement by making extra premium instrument accepting you can manage the cost of it while getting to the money worth of your disaster protection strategy. Make a point to scan it casually, then talk with your assessment guide to stay away from undesirable duty liabilities. Many thanks to everyone who watched my video. If you want to get more new videos, you must subscribe. And if you want to get the next video update, keep pressing the bell icon. And of course, don't forget to give a like.